What's up? Mortgage Rate Monday. Today is August 22nd, and ain't looking good this week. Mortgage rates are up. We'll call it just shy of 0.5% this week from last Monday. Like I said, ain't looking good. We had inflation data come in from overseas, so double-digit inflation in the UK for the first time in like 40 years. Germany was like some ridiculous number. It was like 50% or something like that. So it's very much a worldwide economy right now, and the bond market's responding to that, and it's crashing. So that's not good for rates. This week should be pretty quiet besides Friday. Friday is the big day. So we got the Jackson Hole Federal Reserve meeting. That's when they're going to start talking about and announcing their policy on inflation. If they decide that their number one thing is controlling inflation, that's going to be their policy going forward, then we're going to see rates jump up even more. The new normal would probably be around 6%, at least for a couple months, in my opinion. If they say, okay, we like what we're seeing with inflation, we're going to do a little bit more moderate rate hike, then we're going to see rates probably rebound. I don't think they'll go back to where they were, early August, back down in the high fours, but we'll see a little bit of a rebound and a relaxing there. It's pretty much it as far as that goes. Like I said, Friday's the day. That's the day we need to pay attention to see where things are going to go from here. Other news, just from my own experiences this week, appraisals are getting tighter. They were real slow to keep up with the rise in values. So you saw a lot of appraisal gaps and stuff, which, values also rose ridiculously fast, so you kind of get that. But they're very quick to reverse it as values are starting to kind of go back down a little bit. It's like I had a couple this week where you would have thought it'd been a layup, compared to the comps and everything, but they were really close, and it didn't make much sense, at least on paper. But I'm sure they're feeling the pressure too. So, is what it is. Get that email out of here. But that's pretty much it this week. I guess it doesn't really affect things much. Like Wells Fargo and a couple other big lenders are shutting down their correspondent channels. So to explain what that means, you have a retail division of lending and you have a wholesale division of lending. As a broker, I'm more in the wholesale channel. So you'll have like Wells Fargo and ABC Mortgage Company, who is the lender. The lender, ABC Mortgage Company, would give out the mortgages, give out the loans, or fund the loans, I should say, but they're getting their money from Wells Fargo. And it's like, okay, why would Wells Fargo even do that? Like, they're competing against themselves. They're still making pretty much the same profit either way, because their retail division, all those people are on their payroll. And when they have people on their payroll, they have to still hit their numbers. So that means it's more expensive to the consumer to go that way. That's why wholesale's generally cheaper. But you'd be surprised how few sources of money there actually is for the mortgage industry. Like, they all kind of come from a handful of entities. So all of those little spider webs are starting to get cut off right now. You're going to see a lot more smaller lenders kind of die off. But, is what it is. You got to adapt and you got to keep going. So I will keep an eye on this stuff. Like I said, Friday's the big day to keep an eye on, and just we'll see what happens. That's really all we can say right now. So thank you guys for watching. Hope you got some value out of this, and I'll see you next week.